Okay, hello and welcome everyone. A very good evening to every viewer that has joined in, and those who will be joining, and those who will be watching this live stream as a recorded session. I welcome you all to yet another live session of Market Insights, where we kind of research and analyze a lot of different things, and yes, we analyze a lot of stuff. We try to make sense of where the markets are moving, where we learn a lot of technical concepts as well as theories, and get to know the markets a little better, one step at a time, right? So today's session, obviously, by the looks of it, you can know that today we have the CPI data, that is the Consumer Prices Index. Okay, so that is one of the inflation indicators, and which can create quite a movement in the market. Okay, and since 30 minutes more CPI, guys. Okay, yes, obviously, right? So we have got 30 minutes more in order to look at the data, and where the market will pump. Either one side it will go. Okay, depending upon the data. If the data is kind of down, right? But before going to the data itself, I have noticed certain things in the market. Okay, I have noticed certain things in the market which is quite disturbing, I would say, because the same thing has been shared by a lot of people, especially relating to the Silicon Valley Bank and its crisis, and the banking crisis in the United States, and a lot of other things, and the extremely cynical view that has been posted. If you can see this particular, before starting off, is my audio audible, and is my video visible? Kindly comment in the chat box so that I know. Okay, and if there is any form of background noises or whatever it is, you know I suppose I cannot eliminate background noises as such, but I will try to minimize them as much as I can. So kindly post in the chat box if it is all right. Okay, who's this? Is the audio audible and the video visible? Okay, we've got one. Yes, you can. I don't know what I can. Maybe specify a little bit. Okay, if it is all right, I suppose, right? Yes. Okay, so nice. Let us begin. Okay, so this is the daily time frame of USD. Before beginning to get into all the stuff, just a small hint as to where we are currently. Right, we were already in an upside, which was motivated, you know, by the extremely high employment numbers. Even in the last week as well, we noticed that the NFP data was still high. Okay, but the average hourly earnings has dropped, and a few the unemployment rate at which the unemployment is increasing has increased a little bit higher than expected. Okay, but it was kind of a mixed signal. Okay, it was kind of a mixed signal. Either ways, we were going up. Okay, as we compare it, we were going up. Okay, let's see in this color. In this scenario, we were headed upwards. Okay, no matter the daily fluctuations, we are not looking at the daily fluctuations as such. Okay, but we did retrace to a very strong movement in the market. Okay, now this strong movement as such, I will count it from 9th March or whatever it is, only yesterday as well, because Silicon Valley Bank has been in the talk since the last week itself. Okay, when it completely crashed due to certain fundamental reasons that I will discuss, that I will give you a little bit of a hint of, but it is not very much relevant to the topic as such that we are discussing today. Okay, that is on our agenda as such. Okay, so we will try to keep it as minimal as you can, but there are a lot of cynical comments that are being made in the market. Okay, a lot of news channels, a lot of things are, revolving around that the market is completely going into a depression and everything is, flying everywhere. Okay, there is a domino effect. In even the Indian markets are going to be affected. The Pakistan markets are going to be affected. The South Korean market, whatever it is. Okay, people are exaggerating it to a point that it is becoming undigestible. Okay, right now, although it will impact, that is very obvious. Okay, if you are working the markets, if you are working in the markets, if you are understanding, and if you are willing to understand the markets, you know that a crash anywhere, okay, anywhere in the world, in any market of the world, okay, obviously is going to impact another market of the world, right? And why is that? Why is that possible? Can anybody post in the chat box? Okay, somebody is posting first only their own suggestions. No worries, we will do that. Don't worry about it. Okay, say USD. Uh, that is one of the staples that we have. Okay, so this is the scenario. First, let us concentrate on what our point of topic is. Right. So we were in the upside. Okay, and then we saw quite the contrarian move. Okay, let us just measure it. Okay, these three particular bars we closed here and the low was here. Okay, so we'll take the closing price as such. So the downside was almost around 3%. Okay, that is 408. Okay, pips as such. So 137 we were moving, we came down to 133 somewhat. Okay, so $4 difference was there. Now this is a retracement of nearly 3%. Okay, when we talk about other currencies where USD is involved, let's say USD franc. Okay, I'm talking about the downfall. 3 days we are counting now, 3 and the closing price. It is somewhere around 3.24%. So it is higher in this particular case because Swiss franc is a very strong currency, right? Apart from that, despite the high interest rate differential, okay, because Japan is still following a uh, you know expansionary monetary policy. They have kept their interest rates very low. Okay, in fact their interest rates are negative in order to persuade or the to provide a stimulus to the economic scenario there. Still, even though there is a huge interest rate differential, yet there was a downfall of 3% over the 3 days that we have seen. Okay, now inflation of US. Okay, we will get to that. Inflation of US is what we are going to target today. CPI, we are going to see that. Okay, but before that, why this 3% of retracement that we have seen? It is because of a particular bank getting collapsed. Okay, because of certain over leveraged positions that they have taken. Okay, now what positions that they had taken is relating to the bond market. Okay, is relating to the bond market and a small idea of how this particular thing works. Okay, now to understand the bond market, the first we need to understand this particular collapse, this particular case study. Okay, we will concentrate on what is the function of a bank. Okay, function of a bank. What is the function of a bank? Obviously this may sound very fundamental, but the function of a bank is obviously to provide loans. Okay, to provide loans is the first and foremost function of a bank. Okay, to get deposits. Okay, that facilitate the loans wala procedure. Okay, if they have got deposits, then only they can forward the loans, right? And earn the difference in the interest that they have. Okay, so that is called spread, which is not of our concern. But currently what happened with SVB is that they had deposits. Okay, but what they did was they were not able to expand their loans. Okay, they were not able to give out loans as quickly as they were providing, they were getting the deposits. Okay, so where is that? X wala signal. Okay, so they were not able to expand loans. Instead, it was decreasing. Okay, their loans portfolio was decreasing. Okay, now in this scenario, what they did, they had extra cash. They went and bought bonds at the start of the year before the interest rate hike cycle began. Okay, they bought those bonds, and those bonds were obviously having very less interest rates. Okay, they were not very attractive investments, but they did buy it so as to just offset their position, so as to let themselves have a breather or something like that, right? Because obviously sitting money, idle money is not good for a bank anyhow, right? They want to earn interest anyhow. So this has been the scenario till now. Later on, what happened is they bought the bonds which were having very low interest rates. Okay, now later on, the Fed, or the Federal Reserve of United States, they started increasing the short-term interest rates, right? They were increasing the short-term interest rates that we have seen, right? From where they were increasing, that also we can see in this particular scenario. Okay, interest rates has been increasing. So what is the scenario in this particular case? Let us see what has been the case here. Consider this particular graph. Okay, they started increasing in March of 2022. Okay, and then they have consistently increased the interest rates. Okay, every month they have somewhat increased. Okay, so starting from which point? This particular point. Okay, 25, then they increased it to 25 basis points, 50 basis points, and currently it is standing at 4.75%. Okay, now this 4.75% meant that the current bonds, they bought the bonds somewhere in this particular area when the interest rates were very low. Now in this scenario, the new bonds had a higher value. Okay, and the previous bonds lost their value because their interest rates were very low. So that is why their investment complete portfolio, it went upside down. Okay, that is why. And we don't know what they have not disclosed, or what kind of things that they have not disclosed, what kind of leverage positions they might have taken. Okay, that is completely their concern. Okay, what our concern is, how did it impact the currency market, how did it impact the commodities market? Okay, in that particular scenario we have to see. So USD JPY, we have already seen a downside in there. Okay, now looking at the chart itself, let us see and consider which part can we make sense of. Right now it is appearing very bearish. Currently the scenario is bearish, but today we have seen a green day. Why green day? Because obviously multiple markets. Okay, let us go down to the hourly time frame in order to understand it better. Okay, this was yesterday, Friday, and then we have seen this downfall. Since today we have seen an upside, a slight upside, which is not very you know positive, which is not very looking very strong, right? This movement is not looking very strong as such, because multiple candles are there, and there is a possibility that this upside may not continue, right? But until and unless we are before, this is the 5:30 wala candle. Okay, so if we go to 30 minutes wala candle, then we can see that once this 6 o'clock wala candles forms, it starts forming, right? The data will also come out at the same time, the CPI data that we have. Okay, where it is. Okay, this Fed announcement was also made. Okay, in order to today itself, I suppose, in the night. Okay, yesterday. So they made an announcement, trying to cap the collapse, that is the particular disadvantage that the depositors were facing. They gave their okay, they gave their guarantees as to they will provide certain form of guarantee up to the deposit of $250,000. They will give certain guarantee, and the Fed will improve the situation. They will do whatever they can, whatever, right? So that has happened already. Let us update this particular thing. Okay, this week, this week has been quite interesting because many people, they are saying the same thing. Okay, the one and only thing that they have got is that they are very bearish about everything. The currency is going to collapse, there is going to be a recession, there is going to be this and that. Look, people have earned money in recession as well. Okay, you just need to know where to short, where to exit. That is what the concern should be. A trader does not concern himself from us recession is coming. Okay, one needs to find out the opportunity. That is all that one needs to do. Okay, now I have seen multiple articles, I have been bored of those articles, okay, completely. That how can somebody say this? Okay, how can somebody consistently say that this government is not doing correctly, and this particular organization has played with the people's money, and that and this and that. But what are we supposed to do in that? Okay, yes, we will do gold. Okay, don't worry, Atharva Bhadane, we will get to it. We have got 10 minutes more before the data comes out. We need to basically understand what is the CPI's impact on the current today's market, because many people said that CPI is not going to impact USD as such. Okay, so why did we have a green day today? Okay, why still the USD is slowly inching up a little bit? Why? That is also a questionable thing, right? Now look at this. Why is it going up slowly? Why has it not continued its downfall despite such a huge, you know, consistent downfall all the way till this point? Okay, this is not making sense, right? How will it make sense? So this is the scenario. Okay, this has to go up, and depending upon the data, how the data turns out, that will decide where the price action will go. And you have to go with the price action. Okay, you don't have to think twice about where to enter and what to do and this and that, and recession is coming and all that. Don't think about recession, try to find out the opportunity in the recession. That's all. Okay, many people will say, oh my god, this particular market has been thrashed, this particular stock has been thrashed. Yes, they will be thrashed, na. So there are people who are shorting it as well. People are shorting that thing, that is why it is getting thrashed. Okay, so a lot of things are happening in the market. We need to just stay calm. That is one of the most important things that I will say today. Okay, leave CPI behind. This particular lesson must be with every particular person that watches this live stream. Okay, don't give in to panic selling. Okay, don't be a panic seller, don't be a panic buyer. Okay, that is the only lesson that one needs to take away today. Okay, from this live stream. No matter, we will do the gold analysis, we'll do this and we'll do that, but this is the only thing that one needs to be aware of. Now gold, obviously, as suggested, it has went up. Okay, now before going up, it has shown us a very beautiful pattern. Before going up, I had suggested this to my team before, right? It was somewhere around Friday, if I'm not wrong, right? Which day it was, I'm forgetting it, kindly pardon me, but I did share that particular scenario where it was making an ascending triangle somewhat. It may be here somewhere, as I don't suppose so. Where it was, let me check. Okay, just give me a moment. I will see where I had shared that particular, which point I had shared that particular thing. Okay, give me a moment. Okay, so I suppose this was a 5 minute time frame. That is why I'm not able to find it out. Okay, let us find it together. I suppose this was the thing I'm talking about. Okay, it had given us a very good confirmation and entry level as to where to enter, right? And this is what I had sent previously. Now, how to find out an opportunity? Okay, that is a scenario that we will learn today, because people will tell you yes, buy here, sell here, whatever it is, right? But nobody is going to tell you that this is the opportunity that one needs to look for, in spite of what data is coming out. No matter, okay, doesn't matter. This was somewhat of a formation that we had seen, okay. And just as the data came out, okay, at around 7, let me check that first. What was the data? I'm forgetting it. Okay, yeah, it was basically the NFP data, right? So NFP data gave some mixed signals, right? Let me show you. Okay, look at this. The NFP data was positive basically, but the average hourly earnings had dropped, which means that the aggregate demand will come down in the near future. Okay, now don't worry about whatever I'm saying. These are economic terms. It means that the demand will come down, so the currency will also come down. Okay, currency valuation will also come down. The unemployment rate had increased from a suggested or forecasted 3.4% to 3.6%, which meant that people will be without jobs. Okay, and indeed that will lead to a recessionary scenario, or whatever you need to call it. Okay, this was the scenario. It was a mixed signal, but it was highly bearish for the United States dollar, the greenback. Okay, now let's get back to this particular thing. Now, even in this scenario, even in this panic scenario, when the data is going to come out, 5 minute time frame, you are trading. Look at this. You have assigned a value to this particular price action, because it has calculated, it has taken resistance a lot of times at this particular point. Okay, and then it has taken support on this trend line. Although this is an exception, because this is panic. Okay, this is panic. That is why I'm saying don't give in to panic, right? This is the biggest lesson that you will take home today. Only 5 minutes remaining to CPI, so let us get back to our discussion. The gold has increased obviously, and if you can see, we have got some levels as well on gold. Okay, this is going to be an important level, that is 1896, somewhere around 1896 1897. Okay, so these are the levels. Look at this particular scenario. It had certain resistance around this particular 1896 region. Okay, 1893. Then it took some consolidation around this range, and then it took support, and now it is having a support in this region. Okay, somewhere around 1900 to 1896. Okay, now these are retracement levels for your information. Okay, now we will see that the market is kind of ranging. It is forming very low small candles. Okay, low volatile, but just 5 minutes are there, 4 minutes are there, and we'll be counting the movement right now. Okay, so get ready for CPI as such, where it will lead us. Okay, it depends upon the data. The data that we need to look out for is CPI currently. Okay, now look at this. If you, I suppose everybody can see my screen as such. Okay, look at this. The CPI is around 6 p.m. Okay, what impact it will have on different currencies, that we will get to know in just 4 minutes. Okay, apart from that, nothing much has been on the table. Okay, tomorrow we will have PPI, retail sales and stuff like that. Okay, Empire State Manufacturing Index, that is also very crucial data relating to the greenback. Then this is one of the important things that we will look for. Euro USD, for the pair Euro USD, we will have the refi rate that will be revised by the European Central Bank. Okay, they will put out a statement. They will probably increase, okay, the interest rates. They will probably, and thus we are expecting a 50 basis point hike. The market is expecting a 50 basis points hike in this particular scenario. Okay, so again, if it happens, then it will put pressure again on the dollar. Okay, and thus we will see further decline in the USD, and a crisp upside in the Euro USD. Okay, so that is also on the agenda. Just giving example, it will end up, today's week will end up in the consumer sentiment and inflation expectations. Okay, apart from that, in the next week I would say one of the most important data that will come out is this particular scenario, next to next week, I suppose. Otherwise, this is also important. The PMI data is also going to come out. Flash services, flash manufacturing PMI relating to the USD, and in the next to next week, we will have this. Where it is? Okay, this one. Yeah, next week. So we will have the FOMC statement and federal funds rate. Now the scenario is the market was expecting an upside, okay, an increase in the rate hike, but now everybody is questioning the upside, okay, questioning an increase in the rate hike. That questioning is due to the banking collapse, okay, because the banks were not able to handle their funds properly. Now the Fed has to look out for these banks, okay, and they have to kind of restrict themselves of the interest rate hike that was talked about in the previous testimony, in which Jerome Powell, the chairman of the Fed, he gave certain ideas about an increase. Okay, now let us keep on tab on the 6 o'clock, that is today's data, CPI. Let us check what will happen. Okay, just 1 minute remaining. The expected is around 0.4% month on month. Year on year, that is 6% is forecasted. Okay, if it is lower than this, then there is problem for dollar. If it is higher, and especially exceptionally higher, then it is good for the dollar. Okay, that means still there is chance that Fed will hike the rates despite the banking collapse. There is still a chance. Okay, however, we need to be looking at the data and not making assumptions. That is not what we do. Okay, and it is 6 o'clock. Let us revise this once again. Okay, a lot of people are going to see this particular data, and we need to also be looking at this data. Okay, that is 6 only. Okay, as forecasted, and core CPI is 0.5. Okay, not much to be seen here. Okay, 0.5 CPI, there will be continued upside. Okay, in gold, look at this, very close to our support level, and then it is going to see some upside. However, it is not going to be a swift up move. Okay, there will be some form of a slow movement upside. Okay, now let us look at USD. Okay, as such, what has happened? Okay, currently the data is not as much as anticipated. It is almost the same as the forecasted, except for the core CPI that puts in the non-volatile category items, but it is lower comparatively. We will see. I suppose there is continued problems for the dollar, and continued upside for the commodities as such. Okay, like this we see there was an upside. A high was made somewhere around 103, and now we are going down. Okay, till what time? This is the scenario. We are looking at somewhat of a downside of, let us see. Okay, this one is the first support, somewhere around 102.7. It will go down. Okay, it will not be a swift move as such. This is high volatility action. There will be some high volatility action, and then probably it will slowly come down. Okay, it will take some time. Okay, but we have to get into the trade in this particular scenario only. Okay, so this is the scenario: a high volatile candle with a higher upper wick, which is already very bearish. Okay, this candle itself is bearish, but what is going to happen? That is the question. First supposed support. This is not a trading advice again. I will put up that particular thing I forgot to put up. Okay, this is not a trading advice as such. Okay, yeah, this is for education purposes only. And as we are discussing it, uh, as discussed, USD is currently under pressure. Okay, and also the commodities, right, they are going up. If we are considering Euro USD, let us say, it has come up a lot. Look at this. Euro USD has pumped out. I knew it because Euro has a very good chance of making a comeback. Okay, after reaching to parity with USD, which was quite humiliating for the European Union, I would say. But currently now it is making. Now look at this as well. Notice how these things work. Okay, the levels that I put up. Look at how precisely it has come down to this level and then made a low and then recovered from this position. So right now this has breached out this particular level and now it is consistently going to go up. Right, these are all the resistances as such. Okay, so yes, that is all for today. I would say there is nothing much to discuss here. Right, any particular suggestion that you would do, that you would want me to show you on the charts? There's Where is the commodity heading? Let us see here as well. Okay, it is going up. Obviously there will be a continued upside to the gold. Okay, further, if we will do certain daily data wala movement where we are heading and stuff like that. Let us delete this particular thing first. Okay, now look at this. The red candle has become somewhat of a hammer. Right, this was completely red, taking some support around 1896, 1899, somewhere around. Okay, now the next resistance is somewhere around 63, which has already been tested. Okay, in February. It has been tested in February. Wait a second. It has been okay now. It has already been tested in February of this year, right? And then it has come down due to certain data only. I suppose such candles you cannot see. You do not see it very often, right? So this is the support, this is the resistance. You have got what you came for, right? But we will wait. We will see how we are going to analyze this data, right? So this is the impact of CPI that we are talking about. An upside that is completely handled by a single data that shows the inflation of a particular economy. Now, getting into the relationship between the inflation and the currency valuation is that if the inflation is high, let me just type in something. Okay, if the inflation in a country is high, now this is very basic stuff, however it is worthy to be noted. Okay, if the inflation in the country is very high, okay, as compared to other countries, then this means that the people in that country, that is consumers, will need more money in order to get their daily consumables or their consumer durables, whatever they need to buy for sustenance, right? They will need more money to buy few goods, right? This is the scenario that is happening. Now the inflation is coming down, that means the money that is required to buy goods is lesser. Okay, so the inflation is high, that is good for currency. Why? Because currency is in demand. Okay, people will demand more currency, okay, to fulfill their consumption. But if vice versa, consider it accordingly. If vice versa, okay, if the inflation is not high, it is low, that means what? that the currency is strong, but currency is able to buy more. Okay, so few notes are going to buy you more. That means you have lesser need for currency. You will demand money for consumption, right? So this is the basic idea behind the relationship of currency and inflation, right? This is the scenario. Now we have already seen the upside and the downside. We have seen a good amount of support that has been reached around this particular point, 1896. It has not breached it. That means we are on the correct path. Okay, it has been an outstanding. Okay, wait a second, we are not able to see this. Okay, wait a moment, I've typed in here. Okay, this is the relationship between the currency and the currency valuation and the inflation. If the inflation in the country is high, this means that consumers will need more money to buy few goods. That means they will ask for more money. That means the currency will be in demand. Now let us see that there has been a movement. Look at this. Okay, a gap down opening has been there. Okay, now this drama will continue. Okay, don't worry about it, you already know where the support lies. Okay, this somewhere around 1896. Okay, the drama will continue and the drama will be moving in that particular direction. Okay, now looking at the price action, let us see. This is a consolidation range. Okay, this is a consolidation range, and if we make a mean of this particular area, let us delete this. Okay, let us take these two examples as high and low. Okay, now look at this scenario, is that this is also going to act as a resistance 1927 somewhere around, but we can see a breach of this particular level. Okay, don't worry about it, we will somehow reach that point as well, but we know that this is the support level 1896. Okay, this drama will continue no matter what. Now USDX, let us see what has happened. The impact is fairly distinguishable. Okay, a gap up opening but a red candle. Okay, this happens sometime because of lot of cut-off orders, right? So these are the orders that has been continuing. This is the scenario. Any particular currency that comes to your mind, post it in the chat box. We'll go and see that as well. In USDX, I had already shown the levels that one needs to look out for. Again, these are Fibonacci levels, so you will be able to understand them as well. Okay, it is in the continuing downtrend. Okay, it has taken a resistance around 105, 106, somewhere around this particular point. Okay, and it is now continuing downside. Okay, it is going to go down, take a support around this region 102.7. okay, all of these levels and everything that I am discussing here is completely educational purposes. Okay, this is completely for understanding the markets and nothing more or less of it. Okay, this is the level 102.7. Okay, let us see. Okay, so we know this particular scenario as well. Now there has been one of the suggestions that we need to go out for GBP, pound yen, right? A pound yen is one of the interesting currency pairs, right? Because it is most of the time it is ranging. Okay, it is ranging in some form. Okay, I have seen this and I have noticed it. Very few times do you think that will you find that it is not ranging, it is kind of trending. Okay, so this is a 5 daily time frame. Let us go down 30-minute time frame or something like that. Okay, now we have seen an upside. Why? Because USD has suffered something. Okay, but it has been going upside since yesterday, after that Silicon Valley wala whole scenario shebang. Okay, let us see. Now notice this, that 13, okay, 13 to 1 o'clock to 6 o'clock. Okay, 6 o'clock, right? So American session begins and the pump up continues. Okay, so the American session has provided a very good support to the GBP JPY. What is happening next? Let us check. Now look at this particular scenario. Most of the time it is ranging. Okay, look at this. This is also a ranging market. Okay, you can't do much in a ranging pair. Okay, look at this. So much of ranging. You can find most of the time it is ranging. Very few do you find such peaks and swings that are being made. Okay, even the swings appear to be ranging sometimes. So this is not a ranging, although this has been very swift downside and swift upside within a day. So good covering there. Currently what we are here basically. Okay, let us go back to a higher time frame so as to look at it properly. Look, there is not a very clearly defined trend here. Okay, there is not a clearly defined trend which we can make sense of. Okay, there has been a highly volatile downside here. Okay, which has been the support of a previous particular consolidation. So let us try to make some range out of this particular thing. Okay. Right, so this has been the scenario and the upsides. Okay, this one looks fine. Add another point here. Okay, these lines are not exactly on point. Okay, now if we take a parallel range, okay, close out the magnet as such. Okay, and match it up to the point. Okay, go as to take this particular point, this one. Okay, so somewhat of a range has been formed. Okay, look at this. This is a consolidating market. Most of the times it is consolidating. Okay, maybe not in the intraday time frame. It might provide you certain ups and downs. Okay, most of the times it is not a very clear trending market. Okay, now in this scenario you will see that it is moving in this particular range. Okay, look at this. There will be supports and there will be resistance around this particular line that we had drawn. Okay, support here, support, resistance here. Okay, so we can take a small idea of as to where we need to enter and where we need to exit. There is not much here that we can do. Obviously these are fake outs. Okay, we cannot go back. This is we need to buy a subscription in order to do that. Okay, so overall what is the scenario is this, that there is a support around this particular point 158 and there is a resistance around 167. That is very obvious based on the price action. However, how to find out whether it is going up or down, that we can see using some of our script that we have made. Okay, so let us use this particular script. The script is nothing but the indicator. Okay, so let us delete the things. Let us hide them. That's better. Hide drawings, right? Now look at this scenario. Okay, currently where we are at this particular point, it has already touched the upside of the volatile upper range of the Bollinger Band. Okay, and it is still in the upside. Okay, still in the positive zone, that is a buying zone, because the time frame, the fast moving average is above the slow moving average and slow moving average. Okay, so it is a clear upside after a small consolidation here. The small consolidation you can see in this particular scenario, small consolidation here, a box. Now if you make a box as well, it is very helpful, huh? The rectangle box is very helpful to know, especially when using this particular currency. Okay, where is that rectangle vara? There is a rectangle here somewhere. Okay, it's here, rectangle. Okay, okay, so if I make a rectangle, look at this. Okay, I know if it goes above this particular rectangle I have to long. Okay, and we have got this indicator as well, which is showing that there is an upside relating to it. However, it has touched the upside of the volatile range. Okay, the upper range of the Bollinger Band. That means okay, hello, Jaga Paranthanam, uh, welcome. I suppose we are a bit late. Okay, and it is continuing upside. Okay, already seen where the resistance lies. This is the rectangle that we need to make, especially multiple times you can make that kind of rectangle. Okay, let us delete everything so that I can show you why rectangle is a good thing. Okay, why consolidation is a good thing. Okay, most of the times consolidation is seen as something that you cannot work. You have to work your way around everything. Okay, whether there is a recession, whether there is something else. Okay, no matter what happens, you have to make do with the market. The market will not come to your house and tell you that this is the opportunity that you were looking for, the opportunity of the year. Okay, find this out, trade this particular point. No, you find it out from yourself. Okay, now look at this particular consolidation. However, it might look to be a big one because the width is more. However, this is just a 1 pound difference. Okay, a 1 pound difference is there. That means this range is very small. Okay, and this is the scenario. Okay, the first that we have seen is an upside. Okay, one breakout, taken support, second upside, then it's taken support, and then it is going up again. So multiple times you will find out that ranging market and consolidation markets and this particular formation is mind blowing. It is a killer combination. Okay, just give me a moment. Okay, just give me a moment. Okay, I will call you back. Okay, bye. Yeah. So this is the scenario, right? Ranging markets plus rectangle formation, mind-blowing movements that we can capture. Okay. Now look at this as well. Somebody might say that this is a double top here. Okay. Looking at this particular thing. Okay. It has went up, then took resistance twice, right? In this scenario. Let us draw something so as to I can completely give out what I'm saying. I can make more sense using a drawing, right? Now this and this. Okay, look at this. Has taken an upside, took resistance, came back down, took resistance, came back down. Now it was in the mood to continue down. It might have happened, but being the kind of movement that it is, being the kind of formation or a pattern that it is, a rectangle formation, it does not tell you to go short based on the formation. Okay, because this is also formation and this is also formation, but how to find out which formation will work for you, that is also a question, right? Can somebody answer in the chat box which will you trust? Okay, will you trust this double top? Obviously now looking at this you won't trust it, but will you take a position that it will go down? You can take, na, based on the breakdown of this particular case, in this particular scenario. you might take a short position. Now one might consider that yes, this is a double top, now it is going to go down, right? Which one will you consider first? Okay, if there is a double formation that is visible in the market, that is a double top, and then there is a, say for example, a reverse, right? So this is a bearish pattern, and this is I would say both patterns. Okay, this is based on a breakout, so breakout pattern, right? But what it is suggesting is that it will take a support and it will go up, right? Because this was a resistance for a very long time, right? Look at this, okay, and give me an answer in the chat box, okay, where it is. Okay, yeah. So will you trust this double top first, or will you trust this rectangle first? Comment down below in the chat box right now, okay? Before that, we will not continue ahead if I'm not seeing at least 2-3 answers. I want this to be particularly two-sided, two-way communication rather than just one-sided speech. Okay, I don't want it to be a speech. Okay, if I am taking your suggestions, then you might also take my questions seriously. Just put it on the chat box. What do you think? Which do you think is correct if you are trading? Okay, if you are in this particular scenario, what will you consider? Right? There is a double top. Okay, that is also a very crucial pattern. Okay, and it is showing that it will go down, the price action. And then there is a rectangle that you have made, that is also showing that it will go down. Okay, I can't understand this particular language, Gary. Can you please post it in some other language, maybe English, right? So there is a double top here, and then there is a rectangle formation. Obviously, why you need to trust rectangle more? The question is this: why you need to trust this rectangle than considering this particular scenario? Okay, then considering this scenario, why you need to do this? Because this rectangle has got more candles in it, right? And this double top has got very less candles in it, right? 1 2 3 4 5 6 7 8 9, somewhere around 10 candles. But this one has got somewhere around more than, I would say, let us measure. Right? It has got 57 candles in it. Okay, it's got 57 candles. So the more the candles present in a particular pattern, okay, now this is another lesson that we can take out from today's live session, is that the more the candles, more the bars in a particular session, okay, in a particular pattern, that needs to be respected first. Okay, give me a moment. Okay, yeah. Okay, if buy 162.5 is okay for first of all, it is not a trading session. Okay, we are going to do that, but not here. Okay, so I just give you suggestions as to where to enter and what to do and stuff like that. Okay, uh, we teach as to how to understand the markets better. Okay, so I would not suggest that this is a good for buying or this is good for selling. Okay, so you will have to get your hints, okay, from your own side. I'm just teaching you that this is a fundamentally strongly consolidating. It has a tendency of consolidating most of the times. That is why multiple times rectangle formation can be helpful. Okay, like for example this scenario, consolidation again, right? Now why I'm counting this as well? Why am I not doing this and telling you yes, this is a breakdown downside? No. Why? Because this has been a resistance in the back. Okay, in the previous time this has been a resistance. Look at this. That is why I'm counting the whole range as such. Okay, look at this. Now it is making more sense. Now it has upside, it has gone up. Okay, now again if you stretch it out, you will see that this will become a supply zone. Okay, Once it enters and it breaks downside, now it becomes a supply zone. Now it is very hard to breach this particular point. However, it has breached in this particular scenario, okay, obviously. Now again, it is finding it difficult to remain upside, okay. So that is also a questionable thing. So a lot of things that you need to assimilate at the same time, okay, like zone analysis that we have done just now, okay. So that is zone analysis. This is a supply zone, it has become a supply zone. Most of the times it is coming down and it is taking a resistance in this zone, okay. It is coming down, multiple short opportunities are created in this way, okay. Now this somewhat a saturation has come up in 160 region, and then it has come up, okay, and then we are seeing this particular consolidation again and an upside here, okay. Now whether this will continue or it will come back down in this particular rectangle or not, that is a question to the future, okay, that we will see later on. Any other particular currency? We have got just 2 minutes, so let us wrap up everything, okay. Let us have a small discussion on what recession means and what is going to happen, because a lot of articles and a lot of negative news is being thrown out at the investors. And recently I was studying about one particular market. I would not name it which market it is, but recently uh, a study has came out from a particular stock exchange regulator that during the pandemic time and during currently also, since the pandemic time, this particular stock exchange has seen an average loss of retail traders of around, say for example, $1,000, okay. $1,000 for this particular developing economy is very much, okay. 1,000 or 1,200, somewhere around $1,200 is the average loss, okay. Now $1,200 might not mean much to those who are living in US or UK or whatever it is, but being a developing market, this is a huge loss, okay. And this has been posted by one of the stock exchange regulator, okay. So they know where the things are going wrong, okay. So why is it that always the retail traders are in the red, okay? Why is it? Why are we not getting smarter, okay? Because despite a lot of ideas that the market itself is giving to us, look at this, just making a rectangle is giving us so much idea based on this particular consolidation. Then how are we not able to understand it very clearly? I was talking about double top. How are we not able to see this double top, okay? How are we not able to see that? That is a questionable thing, no? Because we are not able to educate ourselves better, or if we are educating ourselves yet we are not able to apply it properly. That happens with me as well, okay. That is not just a question of those who are watching this particular a live stream, or who will be watching this in the near future as a recorded session, right? Obviously multiple people will see this as a downside, right? Now what is the entry point here? That also I have taught a lot of times that we need to look out for neckline. This is the neckline and this has been broken. What a beautiful support also it has shown. Multiple times it has taken support on this candle. There is a consolidation, and once it broke down, and it broke down really well, okay. Now the numbers might not surprise you, 162 to 161.6, somewhere around, but still it is manageable, right? Instead of a loss, this is better, correct? So all these things, when you assimilate your learning, that is when you get to understand how to trade every single market, no matter if it is a recessionary market, if it is an expansionary market, if it is a consolidating market, no matter what happens in what market, right? You need just volume, that's it, okay. Nothing else you need to worry about. You need volume and some good discipline that you need to have. That is all for today. I suppose, thank you very much. We have seen the CPI impact. Let us just go back to the USDX. Let us see what is happening, because we have just completely left it out. If it is going upside, then it is a miracle. Absolutely not. Okay, where it is? Current scenario. Okay, yes, it is struggling, and it will struggle, okay. It will struggle downside, and there is a consistent bias towards the 102 levels, right? And this has been an outstanding session, I would say. Quite productive. We have seen a lot of things, we have covered a lot of things, I have covered the gold as well. Everything said or done in this particular video, I repeat, is completely educational, okay, and has nothing to do with trading advices, okay, and giving hints to people as to trade, okay. So consider that. Be a mature trader, be a mature, person. This is all for education purposes, and thank you very much for being a patient audience, and see you next time. Till that time, happy trading, happy learning, okay. Take care everyone, bye.